Good afternoon, and thank you all for joining us. While we want to focus on the program rules, I'd like to start with about 3 slides that sort of show where we are in terms of funding and allocations. If you go ahead and advance the slide, please. So all this information comes from the Treasury's PPP page. So there's additional information there if you'd like to review. But you'll note here that while there's been nearly $520 billion in loans allocated thus far, there's another $130 billion that's not been funded, at least as of the 25th of this month. Next slide, please. I think it's also pertinent to note, while there's been more than a little concern over loans being extended to larger companies or even public companies, over 65% of the funds that have been expended thus far are for loans less than $1 million. Let's advance one more, please. Finally, out here of an allocation of loans by industry sector. And you'll see there's been a pretty broad allocation among industries. For example, while hotels and restaurants were specifically addressed in the initial CARES Act, the accommodation sector ranks only 5th in this category, or this list of categories. And the related real estate industry didn't even break the top 10. Next slide, please. This slide shows a timeline of recent updates. We'll step back. The original CARES Act was passed on March 27th. The weeks and months that followed brought with them an almost daily wave of changes, updates, and cautionary tales, if not outright warnings by the Department of Treasury and the SBA. Most notably were the statements that companies would be required to demonstrate a, quote, need for the loans, with a related heartburn and concern over meeting a threshold that was never clearly defined. Fortunately, cooler heads ultimately prevailed on that issue, and borrowers received some additional relief on June 5th when the President signed into law the PPP Flexibility Act. Through all of this, our team has worked diligently to keep our clients, our colleagues, and friends informed. But there have been times in which we've had to tell clients, look, these are the rules today, but check with us next week because we're sure they're going to change and we want to be able to update you with those pertinent changes. But as it sits now, we've had nearly 2 months to digest the updated the law and the updated rules, which have stabilized, or at least appeared to have stabilized over the last few weeks. So now while we have a set of mostly workable rules, we're also looking towards the coming wave of forgiveness applications and additional changes. But we thought this was a good time to sit down and update everyone on the program. So with that, I'm going to hand it over to Nicole and Ferran, starting with Nicole, both of whom have been absolutely invaluable in this process. Nicole?
Thanks, Mark. Good afternoon, everyone. I'm Nicole Cuccaro. I'm one of the attorneys at Lowndes that's been following the CARES Act and PPP loan development. We want to be respectful of your time today, so I'm going to go ahead and jump right into the first slide, Madeline. Okay, so on May 22nd, the SBA issued a few interim final rules. The biggest change here was that the definition of payroll costs was changed to include payments to furloughed employees, bonuses, and hazard pay during the covered period, so long as the total compensation did not exceed $100,000 on an annualized basis. Additionally, it clarified an issue on forgiveness reduction due to salary/wage reduction and due to full-time employee reduction. This clarification prevents borrowers from getting hit with a double penalty on forgiveness. So as an example, if an hourly wage employee had been working 40 hours a week and then during the covered period was reduced to 20 hours per week, but the wage was not reduced, the reduction in hours is taken into account for purposes of determining your full-time employees, but the borrower is not required to apply the salary or hourly wage reduction when determining forgiveness. So this was very borrower friendly. The second rule from May 22nd pretty much reiterated what we already knew from the CARES Act, that the SBA had the ability to step in and review any PPP loan that it wants to. It could review your eligibility, how you spent the proceeds, and even the loan amount. Okay, next slide, please. The Flexibility Act was the biggest change. We've seen the most significant changes come out of this. It corrected a lot of issues. It clarified a lot of issues. So as a quick overview, I'll go over what happened, and then we're going to go into more detail, and Ferran's going to pick up on some of those too. So the Flexibility Act extended the application deadline, which has actually since been extended again, extended the covered period, changed the percentage of loan funds that are required to be spent on payroll costs, extended the safe harbor period, extended the payment deferral, and extended the maturity date. And I'm going to go into a little more detail on a few of those. Next slide, please. So the first thing it did was extended the PPP application deadline. When the Flexibility Act was passed, it actually said that borrowers would be eligible until December 31st, but there was a conflicting rule that borrowers had to apply by June 30th. Later, we found out that they were actually going to extend the deadline again until August 8th, which is where we stand now. We have about 130 billion left of the allocated 670 billion that has been unspent so far. So we're not sure if they're going to extend this deadline again beyond August 8th. There was a proposal this week that Ferran is going to touch on a little bit more, where they may allow borrowers to go for a second round of PPP funds, but it's going to be, the most severely harmed borrowers and smaller employers if this proposal goes anywhere. Next slide, please. The other thing it did was extend the covered period. So if you recall from the original CARES Act, you had 8 weeks to spend your PPP loan proceeds, and everyone sort of rushed to spend them all. When the Flexibility Act was passed, it changed it to 24 weeks, which was a significant change, but perhaps a little bit too late for some borrowers who had already rushed to spend it all. Now you can elect to use the 8-week period if you want, but if you have a loan after June 5th, your default is 24 weeks to use it. The big takeaway here is in no event can your covered period extend beyond December 31st of this year. So you just want to make sure you're using all that money by December 31st and at least within a 24-week period. Next slide, please. And the last thing that I'm going to touch on from the Flexibility Act was the change in payroll use threshold. This was a huge change when it came out because if you recall from the original CARES Act, you had to spend 75% of your loan proceeds toward payroll costs, which left only 25% to be spent on other allowable expenses. There was also a concern that if you didn't hit the 75% mark toward payroll costs, that you were going to be barred completely from any forgiveness. With the Flexibility Act, this was reduced down to 60%. So now you only have to spend 60% toward your payroll costs, and you can use 40% on other allowable expenses under the CARES Act. Then a few days or weeks after the Flexibility Act was passed, the Secretary of Treasury actually confirmed that this, threshold, if you didn't meet it, it wasn't going to be an absolute bar from forgiveness. He said that he's interpreting the 60% as, quote, a proportional limit on non-payroll costs as a share of the borrower's loan forgiveness amount, rather than a threshold for receiving any loan forgiveness. So this is a big win for borrowers. It'll prevent borrowers who happen to spend less than the 60% of the loan proceeds on payroll costs from being completely ineligible for any amount of forgiveness in accordance with the Flexibility Act safe harbor, but the forgiveness amount will be reduced proportionally. So if you don't hit the 60% toward payroll costs, your forgiveness amount will be reduced proportionally, but it's still not an absolute bar. So that's all I have, and I'm going to pass it over to Ferran to finish up on the Flexibility Act. Thank you.
Thanks, Nicole. And I'll go ahead and get right into it. So prior to the enactment of the PPP Flexibility Act, a borrower had until June 30th to eliminate a reduction in employment, salary, and wages that took place from February 15th to April 26th that would otherwise have reduced their forgivable amount on their PPP loan. So the Flexibility Act goes ahead and extends this safe harbor period until December 31st, 2020. And then additionally, the Act also provides that borrowers are not going to experience a reduction in their forgiveness amount due to a decline in their FTE employee count if their borrower in good faith is able to document A, an inability to rehire individuals who were employed by the borrower on February 15th or similarly qualified individuals, and B, if they are able to document an inability to return to the same level of business activity that such business was operating at before February 15th, 2020, due to compliance with established guidance issued by the Secretary of Health and Human Services, the CDC, or OSHA. And these refers to guidelines or regulations put in place from March 1st, 2020 to December 31st, 2020, related to maintenance standards for sanitation, social distancing, or other worker and customer safety related requirements related to COVID-19. So the first exception is going to be when a borrower can't find a qualified employee for unfilled positions. This exception is likely going to apply when a borrower requires its labor force to have a specific skill set, but more likely it's going to apply in situations where borrowers are going to have a difficult time finding employees due to risks associated with COVID-19 and an inability to social distance. And then the second exception is just basically if a borrower can't restore their same level of business activity as they were experiencing on February 15th, then that is also going to be a way out for them. So both of these exceptions leave some room for interpretation, but at the end of the day, they are a way for the employers to meet the FTE requirements and not be penalized without actually having to hire back or rehire employees. Next slide, please. So prior to the Flexibility Act, principal and interest payments were deferred for 6 months following the funding date of your loan. So the Flexibility Act extends this to the date on which the forgiveness amount is determined by the lender. However, if a borrower fails to apply for forgiveness within 10 months after their 24-week forgiveness period, then they must begin making principal and interest payments on the date that is 10 months after that 24-month period ends. Next slide, please. So lastly, on the Flexibility Act, it extended the repayment term for portions of the loan, the PPP loans that are not forgiven, from 2 years to 5 years. And then the Act also explicitly provides that PPP borrowers and lenders may mutually agree to modify existing maturity terms in order to conform with a new minimum of the 5-year maturity. The 1% interest rate and all the other terms on the related promissory notes are still going to remain the same. Next slide, please. So moving away from the Flexibility Act, on June 26th, the SBA and the Treasury published the 20th Interim Final Rule, which revised the 14th Interim Final Rule. To summarize, the rule states that in addition to the $20,833 salary cap for owner employees who elect that 24-week covered period, C Corp owner employees are going to be capped at 2019 employee cash compensation, plus employer retirement and health insurance contributions made on their behalf, while S Corp owner employees are going to be capped at 2019 employee cash compensation, plus employer retirement contributions made on their behalf. So as you can see, there's a difference here in the case of S Corporation owner employees, employer health, because employer health insurance contributions made on the owner employee's behalf can't be separately added because those payments for an S Corp owner employee are already going to be included in their employee cash compensation. So the SBA's rationale for the different treatment of owner employees compared to just employees is that it's consistent with the structure of the CARES Act and the overarching focus to keep people employed, and they're trying to avoid any unnecessary windfalls to borrowers. However, unfortunately, the SBA hasn't defined the term owner employee, nor have they given us any guidance on that's going to help participants determine if the owner employee is intended to extend to employees who own any portion at all, or even a nominal amount of the equity interest in the PPP borrower. So as it stands right now, the instructions of the updated loan forgiveness direct borrowers to exclude owner employees from the list of employees identified on Schedule A of the worksheet, but there's no rubric to guide borrowers in making the decision as to whether or not to include those employees in the owner employee category. So this could be particularly an issue for smaller companies whose employees may have a small stake as part of some sort of incentive. So the lack of clarity as to who should be deemed an owner employee is problematic because borrowers who are seeking to maximize forgiveness, owner employees are going to be capped for the regular employees for that 24-week forgiveness period for salary are going to be capped at $46,000, which is just 24 weeks prorated at that $100,000 annual salary threshold. But the cap for owner employees is over 50% lower, and that's at that $20,833 amount that I mentioned earlier. So it is a very significant difference, and there's clearly some uncertainty here. We definitely need some clarification from the SBA as to who's going to be considered an owner employee for purposes of calculating forgiveness, because it is going to make a big difference in the long run. Next slide, please. So on July 6th, the SBA released detailed information regarding more than 650,000 PPP borrowers. The SBA noted that canceled loans were not included in this information, and details were not released on loans below $150,000, but totals for those loans were provided by zip code, industry, and business type. So for borrowers with loans above 150K, they have had their loan amounts and names publicly listed. Well, the loan amounts have not been listed exactly. They've been listed in accordance with the ranges that you see there on the slide. So now that this info has been released, we do suggest that any concerned borrowers be prepared to respond to inquiries from the press or any other interested parties about how they qualify for the eligibility requirements, their justifications for needing the loan, and ultimately how the proceeds were used, because these are questions that an interested party may ask, and borrowers should be prepared to answer them if they do come up now that the information is public. Next slide, please. So some additional updates. The SBA has recently clarified that a borrower may apply for forgiveness at any time on or before the maturity date of its loan. This includes prior to the end of the applicable covered period if the borrower has used all of their loan proceeds for which they're requesting forgiveness. However, borrowers who choose to apply for forgiveness ahead of time should be aware that if there is any reduction to salary or FTE employee count, you are going to have to, for purposes of calculating your forgiveness, you're going to have to carry that reduction over the full 24-week period, even if your funds were expended in a shorter period of time. So basically, what that means is if you are using a 24-week cover period and you apply after 12 weeks, if you've had a reduction of 25%, you still need to carry that over for the full 24 weeks for calculations. Lastly, several congressional leaders have indicated that there's some additional coronavirus relief packages being considered. They were being considered in late July, so it looks like it's dragged on into August. There was recently a proposal on Monday from Senators Marco Rubio and Suzanne Collins. So this new act is intended to correct some of the problems and some of the challenges that PPP borrowers have faced. And the intention is to open some new opportunities for PPP borrowers who may not have been treated exactly fairly through the first round. So as Nicole mentioned, the proposal includes a potential second PPP loan for past borrowers that are able to meet a certain criteria. And these loans are going to be potentially going to be geared towards borrowers with 300 or less employees, or some alternative size standard that's going to be later established by the SBA. But again, this is at this point, this is just a proposal. So we'll be on the lookout for any new regulation coming our way. And with that, I'd like to thank you all for your time and open the floor to any questions that you guys may have.
I think we have one so far, which I think is a good one. One of our attendees asked, if 100% of my loan goes to payroll to employees who make under $100,000 a year within the 24-month period, which is the longer covered period for forgiveness in which you're allowed to spend these funds, after the loan was approved and received, what issue is my biggest concern that might trigger a need to repay? I think, and Ferran and Nicole, please chime in. I think my first question on this immediately is, look, have you had to let any employees go? Have you reduced salaries by more than 25%? Because a proportionate reduction in the forgiveness amount is something you definitely need to be concerned about if you've had to let employees go. If you have not, then I think at that point it's mostly a matter of proper documentation, filling out the forms and providing enough support for the forgiveness application in terms of paperwork. Nicole, Ferran, do you want to add a little bit to that?
I just wanted to clarify one thing in the question. Did you mean the 24-week period to spend the?
Yes. He meant the 24-week period. Yes.
Okay.
Yeah, correct. Yeah.
No, I think Mark covered it. I mean, if you're planning on spending it 100% towards payroll costs, that's the absolute safest you can be in seeking 100% forgiveness.
Great. We have another one. We have a question. What specifically is included in non-payroll expenses? And do I have to list them separately on my forgiveness form? Do one of you want to take that?
So the list of what is included in payroll costs is salary, wage, commission, or similar compensation, bonuses, medical insurance. Am I forgetting anything else, Ferran or Mark?
Vacation leave as well. Yeah, I have it here.
Let's talk about non-payroll expenses. What are included in non-payroll expenses?
You can use it on rent,
utility payments, mortgage interest payments. Yeah, and then lastly is transportation. Mark, I know that last time that we discussed this, we weren't exactly clear on how transportation was being defined. I'm not sure if we've gotten any clarification since in that regard, but it's otherwise utilities, mortgage payments, and rental payments.
I haven't seen a lot of clarification on transportation either. I think something that's interesting that has happened over the last several weeks with this is, I think at the beginning we were all looking at rent from a real estate perspective and thinking rent on real estate, but as it turns out, it was broadened a bit to include any sort of business lease payments. But again, all of this had to have been entered into by contract by February 15th. So, and that's utilities, these rental payments, et cetera. So if you had a contract for the provision of these services by February 15th, then you can apply for them. The other interesting thing about this is if you're, and I don't think this is relevant as it was when we just had the 8-week covered period, but because of this 24-week covered period, but there is room for expansion here in some respects because your payroll includes payroll that was accrued before your covered period, but paid during the covered period. And it also includes payroll that's paid after the covered period and the immediately following payroll payment date. And that goes for some of your other expenses too.
Yeah, I think the original language under the CARES Act was accrued and paid in the covered period. And now, they've looked at that again and said accrued or paid during the covered period, which has been helpful.
And we have a couple of additional questions on sort of timing for the forgiveness application. Nicole, Ferran, do you want to take one of that?
Which question are you looking at, Mark? Oh, and
there's one from Ed and one from Andrew. I think they're on the same subject.
Okay, because our marketing team is letting us know this. If you all could please enter your questions into the Q&A box so we have them all in one place instead of the chat box, that would be great. Okay, so Edna's question, are you able to send documentation for forgiveness now, or do you have to wait for a certain timeline? No, you are able to send it now. And then what else do we have? Any other questions stick out to you, Mark?
Yeah, I think the other one is, let's talk about the forgiveness application process. So Andrew's asking here, can I request forgiveness before the end of my 24-week covered period? And the answer to that is yes. Now, there's a bit of a caveat to that on a practical, laid off a number of employees. So if you've reduced staff and you're planning to rehire by the end of the year, then you may want to put off that application until you have had a chance to rehire. Then again, you may not. That's sort of a tactical decision you have to make on your own in terms of what your expectations are for your business and when you want to be able to book that forgiveness. I know there's been a bit of discussion recently that people want to make sure they get forgiveness in before the end of their fiscal year. But if you're strictly speaking, if 8 weeks isn't quite enough for you and you need 11, 12, or 13, and what you're worried about is being forced to wait until the end of the 24-week period to apply for forgiveness, that's not necessary. As soon as you've used up funds, you can go ahead and get that application in and get forgiveness. Again, the caveat being if you have a proportional reduction issue because you've either reduced salaries beyond the 25% threshold, or you've laid off employees and there's some rules around this. You've laid off employees, but they weren't fired for cause. They didn't quit. You didn't attempt to rehire them, this sort of thing. And what you're really relying on is your business was hit. It's been reduced due to the COVID cautionary practices, and therefore you need to wait till the end of the year to see if you can rehire. So there's, again, it's a little bit of a back and forth there. Pamela's asking about benefits. Fern, do you want to take the one on benefits?
What about financial aid? Yes, give me a second. Can any of them be included in either the 60%? Right. Yeah, sorry. I guess I'm assuming that. Okay, so as far as I understand benefits, it's made toward retirement payments of any retirement benefits can be included in your payroll amount. So that would be included toward your 60%. And as far as health insurance, you can include payments required for provision of group health insurance benefits, and that includes insurance premiums, and that would also be included in payroll expenses. So that would be part of your 60%.
Okay. We have a question from...
Go ahead.
Sorry, go ahead, Mark.
I was just going to say, I think we have to be careful with this too, because the rules have come out with a distinction between a pure employee and a quote owner or owner employee. And in terms of health benefits and retirement benefits, there's some limitations that hit quote owners, although that has not been clearly defined, that would subject the health benefits and the retirement benefits to the $100,000 per year cap prorated. So that's something that is a bit of a detail that we're happy to help you sort of work through, but it's not abundantly clear who owners are. Go ahead, Nicole. I'm sorry, I didn't want to interrupt you there.
No, you're good. I was just going to bring up the next question. Donnie Williams asked, can you explain the differences in the forgiveness criteria between 8 and 24 weeks? To my knowledge, there's no real difference in the criteria. It's just that the covered period has been extended, so you could potentially have more if it took longer than the 8 weeks to spend the PPP loan proceeds. You can still be forgiven if you go under the 24-week period. If I'm understanding your question correctly.
The only I think technical difference would be the difference in the threshold for how much you can pay an owner employee. For the 8-week period, it's around 15,000, whereas for the 24-week period, it goes up to about 20,000. But otherwise, you can elect either period.
Mm-hmm.
Yeah, it's really just a period in which you can use the funds. So it's not there's not major difference between the two. Although, Fern, you bring up a really good point on the cap for owners. You would have expected, had they switched it from the 8-week to the 24-week period, you would have had a proportionate increase in the amount that an owner could take for allocation. But what they did is they reduced it to the 20,000 because they wanted to limit the amount that an owner employee could get forgiven. And they based that on the 2.5 month calculation for the principal amount of loan. So that's why they came up with that 20,000 some odd figure, is it's 2.5 months of salary for somebody who makes 100,000.
Got it. Okay, I have next question here from Michelle. It says, if we received our loan on April 26th and extended cover, please clarify the date our forgiveness application is due if we received our loan on April 26th and we're using the 24-week covered period. So if you receive your loans on April 26th, so you can apply for forgiveness anytime up until the maturity of your loan, that being the 5-year maturity. So if you receive your loans on April 26th, after that you have 10 months after the last day of that 24-week period to apply for forgiveness before you need to start making payments of interest and principal on that. But you don't need to actually, you can begin making those payments and still apply for forgiveness at any period before the maturity date of your PPP loan. Okay, there's another question. Can I claim any of my rent prior to April 1st in the forgiveness? I guess I'm not understanding the significance of that April 1st date, but as long as it was, Mark, correct me if I'm wrong, as long as it was a contract or a rent obligation that was in place prior to February 15th, 2020, then there's no reason that it shouldn't be included in your forgivable expenses.
Yeah, I think what Pamela may be getting at here is a concern regarding when the loan was funded. And no, you can't use rent paid prior to your, quote, covered period. So this 8-week or 24-week, quote, covered period is designed that's the period in which you can use the funds for allowed and forgivable expenses. So if, for example, your loan was funded on April 15th and your first rent payment is due on May 1st, then the May 1st rent payment would be included, but your April 1st rent payment would not be included in that calculation. I think that's what she's going after here, if I'm understanding correctly.
Gotcha.
So let me go with this next one too. Mark, can an owner take distributions, or would that affect the interpretation of the need to take the loan? The need to take the loan is checked off point, still seems a bit vague. Maybe we can have survived if we not take the loan. Yeah, look, the program is designed to allow owners of businesses to take their own salary or profits off the top. There's a little bit of difference in the way they're treated in terms of the maximum forgiveness amount, which we just addressed earlier, between a $15,000 and change and a $20,000 and change cap based on the $100,000 per year, and then the $20,000 is based on the 2.5 months too. So there's a little complication there. There's also some limitations on whether that $100,000 included in that $100,000 cap are just pure cash compensation, or whether it also includes medical benefits and retirement benefits. Medical benefits and retirement benefits are limited for owners. So by that cap, depending on the situation, so we'd have to go into some detail there, which we're happy to do. But by and large, yes, owners are allowed to take. In fact, your original loan application should have included your quote, salary or income in that calculation. So yes, they are forgivable up to those limitations. Who wants to take the next one?
Jump on the next one from Gordon. On full-time employee headcount, if we are able to rehire, but beyond the 24-week period, does that count toward the forgiveness calculation? And mistake me if I'm wrong, but I think that has been extended now through the end of the year, that you could rehire through the end of the year.
Mm-hmm. Yeah, you have till December 31st to rehire. So that's one of those issues that comes up when we start talking about the forgiveness, or excuse me, the
exactly
the covered period, whether you can apply before the end of the covered period. Yes, you can, but if you've had to lay off and you're not sure when you're going to rehire, it might be wise to wait until the end of the year. So once you've been able to restabilize and get maximum forgiveness, by the same token, you have to calculate that off of forgiveness now versus forgiveness later. And I know a number of companies prefer to get it in their fiscal year. So it's something you'd have to think about strategically and address.
Mm-hmm.
So next question is, if we haven't laid off yet, is it better to request forgiveness and then reduce staff? Mark, I want to say that the short answer is yes. I guess it gets a little bit more complicated with the rehiring, with what you just mentioned, that it does make sense to wait until the December 31st to apply for forgiveness, because that's when you kind of had a chance to stabilize. But if your employee numbers haven't changed from February 15th at the time that you, and remain the same over your entire covered period, and then you request forgiveness, then it would be, then the proper course of action, I would say, would be to reduce your staff after you request forgiveness, and you wouldn't be dinged on that. Technically, I don't see how you would be.
I agree. I think that's the right answer, Ferran. I mean, there's always a risk here that something could change, which we've dealt with repeatedly, but I think that's probably the right approach.
Not entirely sure on this next one, Mark. It says, when we get forgiveness, do we reclass the loan on the balance sheet to grant income on your P&L? Should we ask our CPA?
There's some, go ahead, sorry, Ferran. I cut you off.
No, go ahead, Mark, go ahead.
Well, I was going to say, there's some tax issues here, and absolutely with the tax treatment of it being forgiven, and yes, presumably it would be income. Absolutely talk to your CPA. Our colleague, Amanda Wilson, has also talked about this on a number of issues with the tax treatment under this program. And I think it's she's a tax attorney, she's the one to address it, but by and large, yes. I think the answer is generally yes. But I don't think you pay taxes on it from the way I'm understanding it. But I try to avoid federal tax questions at all possible. Defer to our tax attorney.
All right, the next question: if we let one employee go due to performance over our forgiveness period, could this hurt us? 64 employees total. So there is a caveat. So if any employees who are reduced during the covered period, who are fired for cause, voluntarily resign, or voluntarily request a reduction in their number of hours, are not going to count against you. So I guess it would come down to them being fired for cause, which it sounds like they were.
And I think Kaylin has the next question is very similar. We let an employee go after February 15th, but not due to COVID, it was due to performance. Exactly what Ferran just said. So that answers that one.
Mm-hmm.
Okay.
Yeah, I think the only thing I'd add to that is make sure you're documenting the reduction for cause. Make sure that you have good paperwork on why they were let go, what the performance shortages were, et cetera, particularly if you don't replace them. Because depending on your loan amount, above $2 million, you're subject to audit, below, you're probably not. But just in case you do get an audit, you want to make sure that you have the proper paper trail to demonstrate what you were doing with employees.
And actually, to touch on a similar topic, jumping down a little, we have a question from Michelle that says, what if an employee quit after April 15th? That shouldn't be held against us, correct? That is correct. If an employee quits, or if you've laid off employees that you then tried to bring back and they are not willing to come back, that's not going to count against you. But just like Mark said, document everything.
Mm-hmm. Yeah, I think if you jump up here too, Mark has a follow-up question on, I'm 90% owner of an S Corp. The other owner is 10% owner. Am I hearing our limit between the two of us is 20K? It's 20K, well, it's 40K, excuse me, 40K. The answer is it's each. You're allowed as an individual owner of a company to take up to that $100,000 prorated, which if you use the 24-week covered period, not the 8-week covered period. If you use a 24-week covered period, then yes, your cap as an individual is up to 20,000 and change. So yeah. You collectively, you would have a $40,000 cap. But that's for the 24-week covered period, not the 8-week covered period, because the 8-week covered period would give you a 15,000 and change cap, just to be clear. But yes, that's basically correct.
Okay. Scrolling through the questions again. What are your thoughts on the permissibility of including premiums for life and LTD benefits in the health insurance premiums subject to forgiveness? Do you know the answer to this one, Ferran? I actually don't.
As far as I'm aware, you can include your the payments required for provision of group health care benefits, including insurance premiums, in your as part of your payroll costs for each employee. And LTD benefits. I'm not certain about. Go ahead,
it's
Mark.
not clear whether the life would be included or not in those benefits. I think that's one of those you sort of put off to the side and see if you can get forgiveness without it. The same with long-term disability benefits. And I think this is one of the things, and I think sort of as a general point, I think we need to make is when you're filling out the application for forgiveness, you want to start looking at, start with your 60% payroll, your basic payroll. Put that on your spreadsheet. Add your medical benefits that you're paying to your employees. Add your retirement benefits that you're paying your employees. What other benefits you're paying your employees? Put those in another box. Okay. Go down. Then you have to consider for yourself. What are you paying yourself? How much is that? That's capped. Then start looking at the 40%, which is your other expenses. And you need to create a spreadsheet on this and go through it so that most likely, if you're using a 24-week covered period, you should have absolutely no problem whatsoever using the 2.5 months of proceeds from the loan, right? Because those are 2.5 months based solely on payroll. So you shouldn't have an issue using those funds. What will come down to it is if you do have a close call, let's say you want to use the 8-week, or you're trying to use a portion of the 24-week, then you may have these judgment calls that you're going to have to make. We're happy to help walk you through that. We've done that a number of times. I mean, but you always start with the obvious, which is basic payroll, basic medical, and basic retirement benefits, and then work your way up to what you need to get 100% forgiveness.
Okay. We have a question here. I've not yet applied for a PPP loan. I work as a sole proprietor with commission earnings only. 1099 income, no employees. Do I qualify for a forgivable loan? If so, how is my loan amount calculated? What is the deadline to apply? Thanks. Okay, so yes, you do. You should qualify for a loan. Your loan amount is going to be calculated by 2.5 times your average monthly 1099 or net self-employment income for the past 12 months leading up to your application. The deadline as of right now to apply for those loans is August 8th, so it's right around the corner. And I think
I'll just add to that, Ferran, that because that's we haven't focused a lot on the independent contractors, but we did write a pretty detailed article on how to determine your loan amount. So if you look on our website, you can see that article and the exact calculations. I mean, we took them straight from the rule. So that will be really helpful because it is a bit more complicated.
Yeah.
Okay, from Sarah Kelly, I have heard PPP loans under $100,000 will not require forgiveness paperwork. Is this true? There's been a lot of, talk about blanket forgiveness or, forgiveness for a certain amount. At this point, that hasn't been put into place yet. So we're curious to see with the next proposals what's going to happen.
Okay. Follow up on headcount. If I understand correctly, then if we rehire to February 15th level by the application date or December 31st, that FTE still applies to the forgiveness calculation, correct? And what happens if we have to reduce headcount at the beginning of the year in 2021? Will that affect this calculation? So your first portion, the FTE still. Yes, your 215, your February 15th FTE count is still going to apply for that forgiveness calculation amount. And the second question is, No, I think we touched on this. It's if you have to reduce headcount at the beginning of 2021, you shouldn't have any issues there. You've already applied for forgiveness and already had that determination made. Subsequent reduction in employee headcount after the determination of forgiveness shouldn't affect your overall forgiveness amount.
Mark, do you want to take this next one from Carrie? How long do we need to retain documentation from the point of the loan forgiveness application?
I think that's a really good question. It's not one we've really addressed yet. I think, and honestly, I can't tell you off the top of my head. I'd have to go back and check what the audit rules are. But I don't think we've really seen audit rules yet. So I would, at a minimum, keep them for 3 years. I'm more likely to keep records for 7. But I don't know if there's a hard and fast rule on this yet.
Yeah. Okay, we have a question from Frank. Does the clock of forgiveness definitely start when we received the proceeds? I kept my entire staff from March 17th through June. After receiving the funds in June, I had no choice but to furlough and reduce salaries 25%. That's 6 to 8 weeks prior to receiving the money, I paid full salaries. Can I go back to March 17th when calculating? I could have laid people off and brought them back after receiving funds to get full credit, but tried to do the right thing. So let's break this down a little bit. So kept your entire staff from March 17th through June. So you could, I mean, like as we've discussed before, you can bring your employees back through the end of the year if you haven't submitted your forgiveness application yet. So that should help you if you're able to do that. Okay.
Yeah, I think Frank's in a similar position that a lot of companies have found themselves, which is they really tried to continue paying their employees, hopes of getting the loan. Everything got a little delayed, as we all know. You get the money, you've done your best, you've extended funds, and now you've got money to pay employees that you may no longer have. Unfortunately, the answer to that is no. You can't go back and use the period prior to funding the loan. The period, your sort of covered period begins on the date you either receive the loans or that alternative covered period, which is the date on which your first payroll occurs. Now, the good news in all of this is you do have a 24-week period to use the funds, and any reduction for reduction of salaries or laying people off, if you can rehire by the end of the year, or the other safe harbor is that you can demonstrate by the end of the year that you cannot return to normal operations. And I know I'm not using the right term there, but normal operations due to the COVID restrictions. And this is going to affect a number of restaurants because, you know, restaurants all over the country have been reduced to you can only do 25% capacity or 50% capacity, or you can't open if you're a bar, for example. So, you know, that safe harbor will apply and you can use it, but you have to go through that process very carefully to make sure you fill out your application properly.
There's a question here. If an employee used FFRCA to stay home with children, does that decrease my FTE count? So I know if an employer received sick and family leave credits covered by the FFRCA, then you can't include those leave credits in your PPP payroll expenses for calculation purposes. I'm not sure. I haven't been presented with the question of whether them being away should reduce your FTE count, but if you're not receiving FFRCA credits and you're making payroll payments to them, then they're still going to be considered an FTE on your payroll is my understanding. Mark, I'm not sure if you know a little bit more regarding the relationship between FFRCA and PPP.
Not really, but I think you're correct in that. I mean, again, I think you're going to have to look at it and compare it to some of the other rules they've come out with regard to letting somebody go for cause or voluntarily quitting, this sort of thing, and work that analogy a bit. But I think you're probably going to be okay with that. Again, it's not a guarantee. It's not specifically addressed, but I think there's a reasonable argument to be made, and I think you ought to be prepared to make that argument.
Okay. I'm not sure if we addressed the question regarding the time frame for a forgiveness loan to officially be forgiven. There's rumors that banks may wait to review until the end of the 24-week period, even if we apply earlier because the funds have been spent. I believe the original PPP Act had 60 days for a response and 90 days for a determination. I don't remember exactly what the time period was.
It was 60 days, Fern, and I don't know that if there's been an update on that, but it was originally 60 days.
Yep. I haven't seen an update on it. The question now is becoming, when are banks accepting the applications, right? If the bank accepts the application for forgiveness, then they're under that timeline to respond to you. But, the problem we're having now is we understand a number of banks aren't accepting applications for forgiveness yet. So you're kind of in that catch-22. Look, I've done my forgiveness application. You're not accepting the application, but you're required to make that decision. I think that's just one of the pitfalls, I think is probably the better way of putting it, with this program, because the program sort of started before we even had rules. We had a law, we didn't have rules. The program started, this is just another sort of hurdle that we're going to have to go through, is the forgiveness process, which really hasn't started yet. I mean, I haven't really seen banks accepting applications yet. So I think this is something that is sort of an open question. Because, if the bank doesn't accept the application, but you have the application, you try to present the application, are they obligated then to provide that decision within 60 days? I don't know that question. I will say, on a practical level, I'd be working with your bank on forgiveness.
Mm-hmm. And that looks like the last question we have. If my firm received a PPP loan on April 23rd and the new CARE Act is passed and there are more PPP funds available, can you apply for a second loan? So we touched on this earlier. There is a proposal to allow borrowers who have already received a loan to apply for a second loan. What we anticipate, if that does pass, is that it's going to affect smaller employers and employers that have been significantly hit by COVID. I think when Ferran read over it, that they've lost 50% of their revenue at least. So it would depend if you fall into those categories, if that's what they end up passing. And the other thing is, they wouldn't necessarily have to even come up with more funds, because we still have about 100 billion in funds available that haven't been used yet. So I think if we get closer to August 8th and we still have funds that haven't been given to borrowers, we'll be more likely to see a second round of loans, even just with the same funds we have now.
Yeah. So I guess to kind of give you an inkling as to what the proposal says. So borrowers, if they want to go for the second bite of the apple, must demonstrate that there's been at least 50% reduction in gross receipts from January 1st to March 31st, or from April 1st to June 30th, compared to those same periods in 2019. So that's the first that they've actually put a threshold on how much of a reduction in your business activity you'd have to see. And the proposal also says that borrowers must employ no more than 300 employees or meet an alternative size standard under the SBA published guidelines. So it's still up in the air. It looks like they do have some sort of second bite at the apple plan, but the details as to who's going to be eligible are still unclear. Regarding Lamborghinis being forgiven, I'm not sure, but there's at least one Florida man who really hopes so.
That was a creative approach he took, that's for sure.
Yeah.
I think that's it. I think that is. That's great.
Yes.
Thank you all for the number of questions. I mean, that's a phenomenal number. We really appreciate it. It helps complete the program and get these answered. For anyone that has questions that we didn't touch on for whatever reason, or we didn't get a chance to answer more completely, you have follow-up questions, that's what we've been doing quite a bit of over the last few months. I mean, that's why we're doing this program. We're absolutely happy to help. We can get on a call with you. We've helped a number of clients, both with the application process and with their beginnings of running spreadsheets that they can build to help guide them through the forgiveness application process. So we really appreciate your attendance today.
Thank you.
right. Thank you, everybody.
Thank you, Mark, Nicole, and Ferran. And thank you, everyone, for joining us today. Today's presentation will be emailed to you in the next 24 to 48 hours, along with a link to register for the next presentation in our series, How Recent Court Decisions and COVID-19 Impact Your Commercial Property Taxes. That will be on Tuesday, August 4th. For all of our COVID-19 resources, please visit us online at www.lowndes-law.com.
Have a good day, everyone.
Thanks, everybody.